There are many factors that impact investment risks and performance. COVID-19 and the movement control order certainly have an impact too. We ask our industry leaders on how investors should approach investing during these uncertain times in this episode. Keep watching.
Always have a long-term plan. Never take into a short-term fluctuation into a panic action of whatever happened in a very short term. So long as your goal is intact for long term, the short-term volatility will be there. The fund manager will know what to do. So you need to choose a good fund manager, you need to choose a good advisor, and you stay long term, you benefit from the new norm. In fact, I would like to also talk a bit on a little bit more on the investors from the financial planning angles. So first thing first, an investor must have an emergency fund, right? Because we learned from COVID-19, liquidity is the main challenge. Second thing, you must plan your credit well. That means don't have too much of borrowings or loan, because when sudden change of environment may give you a lot of stress on that. Third thing, must invest regularly and invest long term. That's a very key thing to make sure that your financial objectives are being met, without or with or without the short-term shock on that. And then you must always monitor performance and your assets, especially asset allocations. So seek qualified advisors to review strategy and your investment plan, because market are so dynamic. You cannot just sit there and do nothing and never review it. And professional advice is actually may help you to review all your strategy and investment plan. And you must protect the wealth, plan your distribution, because you never know one day it will happen to you, because it happened to other people. The sudden, you meet unwanted events, So you meet accident or you have infected COVID-19. So if you have planned well on your distribution or your exit planning, then at least your family are being protected. So in short, must plan well and plan ahead.
I think from a retail investor's perspective, they really need to understand why they are invested, objectives of investing in the market, and the most important thing is the risk inherent to it. They have to make sure, and this is nothing new, ensuring that you are properly diversified, looking at investments that hopefully have a low correlation, so you are able to withstand any shock. I think it's important from a retail investor perspective, make sure that you don't over leverage and do not speculate, and make sure that you are comfortable with the downside risk. So don't panic. I think this year will definitely be a challenging year, but everyone knows the market comes in cycle. It will recover. Just a matter of how and when.
Well, my personal experience, in such a volatile market environment, investors need to understand what is their risk appetite, and most importantly is the near-term cash flow requirement. And therefore, never hesitate to take profit. And always remember the keyword, diversify.
That was indeed some very good advice from our industry leaders. Remember everyone, understand the reason why you are investing and be sure to manage your risks properly.